Most homeowners know they need to have insurance for their home. In the same way your roof is supposed to be the protection for your home, insurance is supposed to be the financial protection for your home. In my 8 years in the roofing industry, I have run into homeowners who aren't aware there are two types of insurance coverage. One that insures your roof at an actual cash value, while the other at replacement cost value. I'm going to break down the two types and give you examples of what an insurance claim could look like. By the end of the video, you'll know the key differences between actual cash value and replacement cost value policies, how each type affects your roof replacement claims, and which one offers the best protection for your home. Let's get started with what these terms really mean. Imagine discovering a hailstorm caused significant damage to your roof, but when you filed your claim, you're shocked to find out that the insurance payout is far less than you expected. That's exactly what happens with actual cash value policies. What is ACV? Simply put, ACV takes depreciation into account. This means that when your roof is damaged, you'll get the amount the roof is worth after depreciation, not the full amount needed to replace it. For example, if your roof is 15 years old and has damage, your insurance will only pay based on what the roof would be worth today, not how much it costs to get a new one. Let me tell you about a client who thought they had full coverage, only to find out they had an ACV policy that left them with a huge gap in what they needed to replace their roof. They bought coverage through a rep at one of their favorite grocery stores. They were up front. When they bought their policy, they thought it was replacement cost. They chose around a $2,000 deductible, and they understood that that would be their exposure if they ever had a claim. We actually were in the neighborhood doing some work, and they had us come over because there was a lot of wind damage in the neighborhood. They ended up filing a claim and had us meet their insurance adjuster. Everything went well, the damage got acknowledged, and the claims adjuster told them that they should be receiving their estimate for damage within a week or two. When they finally got it back, they were flabbergasted when they looked at the breakdown of the numbers. The total roof replacement was $23,000 after like a 2% deductible of around $6,000, and then the roofing schedule or the ACV coverage on the roof only that they didn't know about. Their final payment ended up being only $3,000. They were left to foot the bill for the rest. That was totally unexpected. Now on the flip side, replacement cost coverage doesn't factor in depreciation. That means if your roof is damaged, the insurance will pay the full cost of replacing it no matter the age or condition. So if a storm blows through and causes damage, you'll get the amount it takes in today's dollars to put on a brand new roof. Now, don't be confused because even on replacement cost value policies, they still will initially hold back depreciation, but once you do the work, it's fully recoverable. Your only out of pocket will be the policy deductible. Now, you might be wondering, which one's right for me? Here's where the rubber meets the road. ACV may seem like a cheaper option initially, but if your roof is older, it could cost you significantly more when it's time to replace the roof. Replacement cost offers more comprehensive coverage, but it usually comes with higher premiums. To avoid unexpected costs when filing your roofing claim, make sure you're covered with the right policy. I hope this was helpful for you, and if you have any questions, leave them in the comments below and we will do our best to answer them. Check out our next video on 5 steps to actually getting your roof replaced by insurance to dive deeper into handling insurance claims correctly.